Welcome back. Deals, deals, deals. Merger activity back in the forefront on Wall Street. Broadcom makes an unsolicited bid to acquire Qualcomm. That deal alone valued at $130 billion, including the assumption of debt. That would be the largest technology takeover ever. Looking at the big picture, overall deal flow is down, though, compared to last year. According to Deal Logic, the total value of announced deals, $1.17 trillion. This time last year, that number was $1.53 trillion. My next guest says the tide may be turning. Joining us right now is Sullivan and Cromwell partner, Frank Acquila. Good to see you, Frank. Thanks so much for joining us.
Good seeing you.
Characterize what's going on in deals right now.
Essentially, what we're seeing is that the year started with a lot of good momentum, but a lot of people, a lot of managements and boards really wanted to wait and see what was going to happen with health care, what was going to happen with tax reform, what was going to happen with the new administration. And what we saw was that over the summer, a lot of boards and managements really decided, you know what, we can't wait much longer. The economic situation is such that it really is not going to get much better. Not much is happening with health care reform. Tax reform will happen when it's going to happen. And if tax reform happens, it's even better. And
they're searching for growth.
We might as well do it.
They're searching for growth.
Yeah, I think we're looking at the Broadcom deal, and I think one of the important things to highlight is they're using their own stock as currency. How important do you think that is going into the 2018? And do you think we're going to see more of stock and cash deals as opposed to just all cash transactions?
Well, I think that's a good point.
Highly valued stock today, right?
Stock is great currency today, where companies have been very reluctant to use it. Let's face it, over the last 10 years, you've seen more companies buy back stock than issue stock or use it in transactions. They're going to be using them in transactions. They're going to be using them in conjunction with cash. And in terms of cash, they have plenty of cash. The balance sheets of U.S., European, Japanese companies are loaded with cash. Plus, there's a prospect with tax reform that they can repatriate. The U.S. companies can repatriate that $2–3 billion of overseas cash, and they can borrow at record low rates and on great terms. Everybody talks about rates, but the terms are important too.
How much is the changing regulatory environment affecting the deal flow that you see into 2018? I mean, President Trump has tried to position himself as, look, we want to free things up, get rid of regulation. Is that having an impact on how CEOs are thinking about these things?
Deregulation leads to economic growth. And we've certainly seen that in lots and lots of industries. What we don't know yet is there a fundamental change in antitrust policy? Is this the Reagan Republican antitrust policy, or are we going to see shades of populism which might retard certain deals? And we have to remember that.
What about the tax package? How does that impact corporations? We were just talking about this tax that it's an excise tax taken.
Right.
Explain what it is. Bloomberg is calling it an atomic bomb in the tax plan.
It's aimed at preventing U.S. companies from shifting earnings offshore to subsidiaries and tax shelters, but there's some concern that it could raise consumer prices. It would hit, say, technology companies, pharmaceutical makers, automakers, even reinsurance businesses. It would, in theory, tax even imports of generic drugs. 20%, huge hit to these companies, and certainly investors will start taking notice of this if it looks like it's going to go through.
Well, I think there's 2 points there. One is, if you have real comprehensive corporate tax reform that works, companies won't need to be shifting profits to different jurisdictions. But I think the underlying problem with that particular provision is that a lot of this tax bill has been rushed and really not studied and vetted. And that's a provision that people need to understand and look at and figure out what are the unintended consequences.
This was the Allergan-Pfizer provision to prevent the inversion situation that were happening, because the situation you have is it's cheaper for foreign companies to invest here in the United States than it is for United States companies to reinvest here. And so that's why this whole Allergan-Pfizer deal, this is trying to attack that, because they didn't want that loophole open. It's $154 billion
right.
save
It doesn't
over 10
make
years.
sense that a company like GSK can bring $100 billion worth of their profits into the United States and make an acquisition in the United States, but a Pfizer or another U.S. company brings in $100 billion of offshore profits, and they have a huge tax hit. Exactly.
All right, we'll leave it there. Frank, thanks so much. Great to see you this morning.
Good seeing you.
Frank Acquila joining us there.